thank you, Chairman Powell and Secretary Yellen, for appearing before the committee. And of course, Secretary Yellen, congratulations. I join my colleagues on your confirmation as the first woman to serve as Secretary of the Treasury. I look forward to the day, hopefully not very far off, when all positions of responsibility, all opportunities in society will advance to the point where we can no longer use the phrase first woman again. That day will come, hopefully soon. This past Friday, the Fed announced the temporary exclusion of treasuries and reserves from the supplemental leverage ratio will expire at the end of the month. The announcement also stated that the Fed will seek public comment on potential SLR modifications. Chairman Powell, could you comment if the exclusion of treasuries and reserves from over the past year helped improve U.S. Treasury market conditions and banks' ability to provide credit? Punch your button, Mr. Chairman.
Sorry, I double-clicked there just out of habit and remuted myself. Okay, so as you know, the Treasury market was experiencing significant dysfunction during the height of the crisis, and we did a number of things. And particularly, we bought a lot of U.S. Treasuries to restore function. We also did this exclusion, and so did many other large countries like us did something like that. If you look back, we threw the kitchen sink at it, and it's hard to say exactly what effect it had. We did the exclusion relatively late, and by then there had been quite a lot of market function recovered. So it's hard, it's difficult. I'd love to give you a straight answer, but it's difficult to say just how helpful it was. And in any case, now that danger is long past.
So secondly, to the possible extent that you could elaborate on the timeline of potential SLR modifications that may come in the near future, Mr. Chairman?
Yes, we expect to put something out for comment, and I can't tell you exactly when that will be, but relatively soon. And we're going to run a very transparent public process, invite comment and consider. I mean, really the point is that because of the substantial increase in reserves and treasuries, the leverage ratio is rapidly becoming the binding constraint from a capital standpoint. And that wasn't our intention at the Fed from the beginning. We like risk-based capital to be binding because it forces banks to manage their risks more carefully.
As everyone on this hearing knows, I've always made it a very strong point that the 3rd Congressional District of Oklahoma is a commodity-driven economy. It's ag and it's energy. There's concern in my district that the financial regulators may be moving towards regulation and supervision with environmental policy objectives, potentially discouraging banks from doing business with entire sectors of the economy. Chairman Powell, could you respond to that concern by my constituents?
Sure. So it's been a long-held policy of the Fed that we don't tell banks what legal businesses they can lend to or order them to lend to. That's not what we do. With the climate change, you're getting at the climate change work that we're doing. We're at a very early stage of understanding the risks to regulated financial institutions from climate change. It is a risk that we think the public has every right to expect that we will assure that the banks do manage over time. And so, again, in early stages of that, I'd be happy to talk to you offline about that, too.
Absolutely. And on that vein, Secretary Yellen, could you provide your thoughts on that concern? Punch that button, Secretary. We all have too many buttons.
Apologies. You want me to weigh in on the issue of lending and climate change?
Yes, that there will potentially be efforts by the financial regulators to move towards regulation, supervision, environmental policy objectives. My folks are concerned that will lead to discouraging banks from doing businesses in certain areas and certain sectors, and consequently potentially have a dramatic effect on their business model or their ability to function.
Well, you know, that climate change is a top priority for the Biden administration, but we agree that financial regulators should be assessing the risks to financial institutions through stress testing and other techniques, and that investors need disclosure of risk, but have no plan to regulate what lending or investments can be done.
Thank you very much. And I can assure you, I and my colleagues will watch that all very closely. With that, I yield back, Chairwoman.